On June 10, 2026, something happened in American cannabis that had never happened before. A U.S. cannabis company listed on the New York Stock Exchange. The question every investor and trader is now asking is the same one you probably have. Is this the moment to invest in U.S. cannabis stocks, or did you already miss it? Hey, I'm Teddy, and I've been investing and trading for over 10 years. I've made a lot of costly mistakes along the way, and my goal with this channel is to provide you with analysis and tips to help you avoid them. If you find any of this helpful, I would greatly appreciate it if you could like and subscribe. Now back to the topic. In this video, I'm going to give you the complete picture on U.S. cannabis stocks. I'll break down how the first U.S. cannabis company got onto the New York Stock Exchange, the full legal timeline, from December 2025 through today. Why the cannabis market is far bigger than most investors realize. The industry tailwinds already locked in. The catalysts still ahead that can push stock prices higher. How the cannabis industry is actually built. And the best cannabis stocks and ETFs worth knowing about. By the end, you'll have everything you need to invest in cannabis. Let's get started. So what just happened for cannabis stocks? On June 10, 2026, Trulieve Cannabis began trading on the New York Stock Exchange under the ticker TRLV. That had never happened before. Not once in the history of American cannabis had a multi-state operator listed on a major U.S. exchange. To understand what that means for you as an investor and trader, you need to know exactly how Trulieve got there. Trulieve did not wait for Washington to move. They engineered a legal structure around the roadblock. They took their recreational cannabis operations, organized them under an entity called Harvest Enterprises LLC, and gave operational control to a third-party investor in exchange for a cash investment. That single transaction removed the New York Stock Exchange's core objection. The exchange's rules block any company from listing if it has illegal recreational cannabis operations on its balance sheet. By transferring operational control to Harvest Enterprises, Trulieve technically no longer consolidates recreational cannabis into its accounting, so the listing went through. There is more to the Trulieve structure than we can cover here. Subscribers get the full breakdown, along with early access to content and deeper analysis at investwithteddy.com. So why did Trulieve have to engineer this structure in the first place to uplist? To answer that, you need to understand the legal chain of events that brought the U.S. cannabis industry to this exact moment. Most investors know something happened with cannabis and the government this year. Few know exactly what, when, or in what order. That sequence matters because it tells you where the opportunities and risks actually lie for investing in cannabis stocks. Here's where the law stands today. Medical cannabis is now federally classified as Schedule III, a drug that is accepted as having medical use. Recreational cannabis remains Schedule I, drugs that are labeled as having zero medical purpose. Those two sentences contain the entire investment setup for 2026 and beyond. Now let's bring you up to date on the most important recent legal events. It starts on December 18, 2025, when the Trump administration issued an executive order instructing the Attorney General to complete the cannabis rescheduling rulemaking. That order did one major thing. It shifted the debate from whether rescheduling would happen to a big when. 4 months later, on April 23, 2026, Acting AG Todd Blanche signed the order formally moving medical cannabis from Schedule I to Schedule III. 5 days after that, on April 28th, the order took effect. For the first time in United States history, the federal government officially acknowledged that cannabis has accepted medical use. That is not a political statement, it is a legal event with major financial impacts for U.S. cannabis stocks. And these financial impacts I'll detail later in the video. As soon as this happened, cannabis operators began restructuring. On June 5th, Trulieve announced its New York Stock Exchange uplisting. 5 days later, on June 10th, it began trading as TRLV, the first U.S. cannabis operator on a major American exchange. Proof of concept confirmed. On June 22nd, the DEA's Schedule III registration window closed. Medical operators across the country registered under the new federal framework, locking in their Schedule III status and the related benefits. Then June 29th arrived. The DEA opened its broader hearing on recreational cannabis rescheduling. That hearing runs through July 15th. The outcome will determine whether recreational cannabis operators receive the same treatment as medical operators, or remain under Schedule 1. Overall, the dominoes have been falling since December. The question now is whether the last one falls on July 15th, or gets blocked. Even with the last domino still in the air, here's what this cannabis market has been quietly building, and why the legal events matter more than most investors realize. So, what value does the cannabis market have? When analysts discuss the cannabis market, they typically compare it against itself: year-over-year growth, state-by-state expansion, total legal sales. That framing misses the real size of the opportunity. Cannabis is not competing within its own category. It is taking market share from 10 separate industries at once, most of which have never faced a real competitor before. Let's start with alcohol. Globally, that is a $1.7 trillion market. For the first time in recorded history, there are now more daily cannabis users in the United States than daily drinkers. 25% of Americans reported consuming zero alcohol in 2024. Cannabis beverages are growing at a 17% compound annual rate, targeting the same occasion, the same consumer, and the same outcome that alcohol has owned for centuries. Tobacco and nicotine vapes represent a $59 billion market running on the same delivery format. Cannabis flower is growing at 12% annually, while tobacco grows at 2.7%. The consumer is switching, and the mechanism, inhalation, is identical. In OTC pain relief, a $31 billion market, CBD topicals are the fastest growing segment. In states with legal cannabis, opioid prescriptions have declined 16%. A May 2026 clinical study found that patients using cannabis reduced daily opioid use by 84% on average, and 24% discontinued opioids entirely. Cannabis has also moved into the sleep aid market in a way traditional OTC brands were not prepared for. 16% of Americans now use cannabis to sleep, compared to 12% using prescription sleep medication. The anxiety medication category faces similar pressure, with growing cannabis use as an alternative in medical states. Then there are cannabis edibles taking market share from a $39 billion gummy supplement market. Wellness beverages, a $21 billion category. CBD skincare growing from $2.3 billion today to a projected $7.9 billion by 2034. No other sector has this many established markets in its path at once. This is not a single category bet. It is a multi-front takeover, and most cannabis stocks are still priced as if they compete with nothing. Every market cannabis is disrupting becomes more accessible the moment federal restrictions are lifted. Medical rescheduling did not create this demand. It removed the legal ceiling that was keeping it capped. Now let's look at exactly what ceilings have already been removed, and what that means for the medical cannabis industry right now. Here's the critical point to keep in mind before we get into this. Medical cannabis is done. Schedule 3 is law, and the registration window has closed. Recreational cannabis is a different story entirely. It is still Schedule 1 at the time of this video recording, and the outcome is ongoing. So with medical cannabis now in a new legal category, what are the implications that can push stock prices higher? Here are 5 industry tailwinds already in effect. 1. 280, tax relief begins. Until April 2026, cannabis companies were taxed on their total revenue, not their profit, meaning some operators paid more in taxes than they actually earned. A normal company with $100 million in revenue pays tax on its profit. A cannabis company paid tax on its revenue. The result was effective tax rates of 70 to 80%. Some operators paid more in federal tax than they earned in net profit. As of April 28, 2026, that penalty no longer applies to medical operations. This is expected to save the industry an estimated $2.3 billion per year. Cash that was being consumed by the federal tax code now stays in the business, available for paying down debt, expanding operations, or reinvestment. 2. Federal recognition opens the door to banking. For years, cannabis companies could not use a normal bank. Not because they were doing anything wrong, but because federal law classified cannabis alongside harsher illegal drugs, and federally insured banks could not touch it. That meant cannabis businesses were holding cash in safes, paying employees with paper checks, and taking on expensive private loans just to operate. Schedule 3 changes the legal foundation that justified blocking them. Some financial institutions are already expanding access. The formal legislation, the Safe Banking Act, has not passed yet, but the legal basis for keeping cannabis out of the banking system just got a lot harder to defend. 3. Index fund inclusion is now structurally possible. Passive index funds, the kind that track the S&P 500, are not allowed to hold assets that are federally illegal. That rule kept trillions of dollars of automatic passive buying power completely locked out of cannabis. With medical cannabis now federally recognized and Trulieve listed on the NYSE, that door has been opened for the first time. Index eligibility does not happen automatically, but the structure that was blocking it is now partially removed. 4. Institutional money can now access cannabis. Pension funds, university endowments, and large institutional investors operate under investment policies that prohibit holding federally illegal assets. Cannabis was blocked outright, not because fund managers did not want exposure, but because their legal mandates would not allow it. A federally recognized Schedule 3 substance is a different conversation. The NYSE listing of Trulieve is the first proof that institutional-grade access is now possible. The lockout is not fully lifted, but it has a crack in it for the first time. 5. The New York Stock Exchange gateway is proven open. Trulieve proved that a replicable legal structure exists for getting onto a major U.S. exchange without waiting for full federal legalization. The architecture they used, separating operational control of recreational, is not a Trulieve-specific story. Any multi-state operator with a separable medical business can execute the same structure today. The point is this: the businesses, the licenses, the dispensaries, the supply chains, they already exist. The reclassification does not need to build this industry from scratch. It just needs to remove the penalty that has been capping its value. Now you know what has already been confirmed for U.S. cannabis stocks. But investing is also about what comes next, the events still ahead that could move these stocks significantly. You've seen what has already happened in the cannabis industry. Now here's what is still ahead: confirmed upcoming events and developing situations that each carry real repricing potential. Here are 6 industry catalysts to watch that could reprice cannabis stocks overnight. 1. The DEA hearing outcome, July 15, 2026. The single most important near-term event for cannabis investors. The DEA hearing on recreational rescheduling starts on June 29th and concludes July 15th. If recreational cannabis moves to Schedule 3, every benefit medical operators are now receiving. Tax relief, federal recognition, institutional access extends to recreational operators. If recreational stays Schedule 1, the full thesis is delayed, not dead, but on a longer clock. Everything else on this list becomes more or less powerful depending on what happens on July 15th. 2. Next New York Stock Exchange uplistings and index inclusions. Trulieve opened the door. Many other U.S. cannabis stocks are the next candidates. When either is listed on a major U.S. exchange, it triggers the same mechanical cascade. Russell 2000 eligibility, passive ETF forced buying, and institutional analyst coverage. Roughly $77 billion in passive index assets must buy at the next annual reconstitution. Not because of a recommendation, but because the index rules require it. This is forced buying, not sentiment-driven. 3. Safe Banking Act passage. The legislation that would formally grant cannabis companies access to standard commercial banking has been reintroduced in Congress multiple times. Passage would unlock commercial credit, reduce the cost of capital, and allow refinancing across the sector. Every reintroduction signals building political will. Passage would be an immediate structural repricing event for the entire industry. 4. IRS and Treasury 280E retroactive guidance. The IRS and Treasury are still preparing formal guidance on how 280E applies going forward. That guidance may allow medical operators to recover overpaid taxes for every month they were taxed under the old Schedule 1. If confirmed, it represents a one-time cash recovery for every registered medical cannabis stock in the country. 5. Pennsylvania adult use legislation. Pennsylvania's governor has stepped up the push for adult use legalization. Pennsylvania is a premium limited license market, the same structure that has given Florida and Illinois operators pricing power and high margins. If Pennsylvania passes adult use, the addressable market in one of the country's most valuable cannabis states expands overnight. Operators with existing Pennsylvania infrastructure capture that expansion immediately. 6. Major CPG or Big Pharma acquisitions. Constellation Brands, Altria, and AB InBev have all studied the U.S. cannabis market closely. A major consumer goods or pharmaceutical company acquiring a U.S. cannabis company outright would be the validation signal that the market would reprice immediately. It would mark the moment cannabis stocks move from alternative investment to consumer staples acquisition target. Now you know the events, both what has already happened and what is still ahead. Before we get to the actual stocks, you need to understand how this industry is actually built, because where a company sits in the chain determines how it makes its money. Think of cannabis like any other product you buy at a store. Before it reaches the shelf, it went through a series of steps, each one handled by a different type of company. In cannabis, there are 5 of those steps. The companies that control the most steps keep the most profit. In this section, I'll break down the 5 stages of how cannabis is produced and sold to consumers in 3 minutes. Stage 1. The farm. This is where cannabis is grown. Medical cannabis requires tightly controlled indoor facilities. Think of it like a pharmaceutical-grade greenhouse where every plant is monitored and tested. For recreational cannabis, it's grown at bigger scale outdoors, or in large greenhouses, focused on producing as much as possible at the lowest cost. Most major cannabis companies grow their own. A few specialists focus only on growing, competing to have the lowest cost per pound. Stage 2. The factory, processing, and manufacturing. In this stage, raw plant material gets turned into the actual products consumers buy. For medical patients, it's pharmaceutical extracts, standardized capsules, and patches. For recreational consumers, examples are pre-rolls, vapes, edibles, concentrates, and topicals. This is the step where the most value is added. A pound of raw cannabis flower is worth a fraction of what it becomes once it is branded, packaged, and standardized. Companies that handle this step themselves keep all of that margin instead of paying someone else to do it. Stage 3, the delivery or distribution. In Stage 3, getting the product from the factory to the store legally requires licensed distributors. They handle the compliance paperwork, the tracking systems, and the transportation. Most large cannabis companies do this themselves. In California, state law requires a licensed third-party distributor, an extra cost built into every sale in the country's largest cannabis market. Stage 4, the store, retail dispensaries. Stage 4 is where cannabis reaches the customer. In medical states, dispensaries look and operate like pharmacies. They have trained staff, prescription protocols, and clinical settings. In recreational states, dispensaries compete on experience, product selection, and brand. The number of dispensary licenses a state issues is often limited. That cap is the moat. Companies that already hold licenses in limited states are protected from new competitors walking in and undercutting them. Stage 5. The tools, ancillary services. These are the companies that help the cannabis industry operate without actually touching the plant. They look like software platforms, compliance tech, testing labs, and banking services. Because they are not handling cannabis directly, they have no Schedule I exposure. They're considered lower risk and more predictable revenue. The trade-off, however, is they do not capture as much upside as the companies running the full operation. The companies to watch are the ones that control stages 1 through 4 under one roof. Every stage they own is a margin they keep. Now, with the value chain in mind, let's look at the best cannabis stocks to invest in. Hey, quick side note, I send a free daily market brief every weekday, just the market's most important events. 15 minutes to read, nothing else. If you want to stay ahead of what's moving without spending all day watching charts and price, sign up at investwithteddy.com. Link is in the description. And if this video has been helpful, please like and subscribe. It helps me keep making this content. With that said, let's continue. You now understand the legal setup, the size of the market, and how this industry is built. Now, what are the best cannabis stocks and ETFs to invest in? In this section, I'll break down the companies to know, organized by where they sit in the value chain we just walked through. Let's start with the vertically integrated operators, who own stages 1 to 4. These are companies that own the farm, the factory, the delivery, and the store, all under one roof. That full stack ownership is the advantage. Trulieve, TRLV, is the only U.S. cannabis multi-state operator currently listed on the New York Stock Exchange. Dominant in Florida, one of the country's most valuable limited license cannabis markets. The NYSE listing makes it the first U.S. cannabis company accessible to institutional investors and index funds. Green Thumb Industries, GTBIF, is one of the most established multi-state operators in the U.S., with a demonstrated profitability that is rare in the sector. Holds strong positions in several premium limited license markets. Verano Holdings, VRNOF, is vertically integrated across multiple states, with significant presence in Florida and Illinois. It's one of the most closely watched candidates for the next NYSE uplisting after Trulieve. CURLF, CURLF, is the largest U.S. cannabis operator by revenue. Broad state coverage and an international footprint that includes licensed operations in Europe. Cresco Labs, CRLBF, is a stock known for its wholesale distribution network, particularly in Illinois, one of the most competitive and lucrative cannabis markets in the country. Lastly, there's Jushi Holdings, JUSHF, who is a smaller operator concentrated in Pennsylvania, a premium limited license market. This one's a higher risk profile than the larger MSOs, but positioned to benefit disproportionately if Pennsylvania expands to adult use. Then we have a cultivation-focused cannabis stock. Glasshouse Brands, GLASF, is a California-based cultivator focused on large-scale, cost-competitive growing. The long-term thesis for Glasshouse is that if California's cannabis market fixes its structural inefficiencies, a low-cost producer is positioned to win it. Then we have two lesser-known cannabis REITs for dividend-focused investors. Innovative Industrial Properties, IIPR, is New York Stock Exchange listed. The company buys cannabis cultivation and processing facilities from operators and leases them straight back under long-term contracts with built-in rent escalators. IIPR is fully listed on the NYSE, pays a dividend, and is fully accessible to institutional investors today. New Lake Capital Partners, NLCP, is another cannabis real estate company. It provides sale-leaseback financing and mortgage loans to state-licensed operators. It's pure-play cannabis real estate with a meaningful dividend yield and a candidate for exchange uplisting as the regulatory environment continues to improve. Now, if you're unsure which stock to choose, you can opt in through investing in an ETF that gives you broad exposure to major U.S. cannabis operators. MSOs is the most direct vehicle for broad U.S. cannabis exposure without picking individual names. It holds the major multi-state operators across its portfolio. MSOS's performance is essentially a sector proxy. It moves with the entire cannabis thesis, not a single company. Then there are Canadian producers like Tilray and Canopy Growth, which are NYSE listed with more institutional coverage. These are worth researching individually to understand how they are impacted by U.S. regulatory changes. Their exposure is different from U.S. MSOs. For subscribers, I go a lot deeper on the specific stocks I'm covering, more analysis on individual names, how I'm thinking about valuation, and the kind of detail that doesn't fit in a free video. You can find more at investwithteddy.com. So, with all of the different cannabis stocks to choose from, how do you start? In this section, I briefly go over how I plan on playing the sector and my framework for making a position. Here's how I would personally evaluate making a position in cannabis stocks. My framework combines four things: market momentum, technical analysis, valuation factors, and company analysis. Market momentum tells me whether the sector as a whole is seeing real buying pressure. For example, after a major catalyst, I want to see the broad sector confirming the move before stepping into any individual position. Technical analysis tells me where the structure is, where the key levels sit, when a stock is extended versus consolidating, and when the risk on a trade is actually well defined. Valuation gives me the context for whether a stock is cheap or expensive relative to its own history and its peers. An individual company analysis tells me which operators are actually positioned to survive and benefit from each catalyst, because not all cannabis stocks will move the same way. Whether I decide to take a position or not, subscribers will be the first to know. In Market Brief Pro, I'll be sharing exactly how I'm analyzing this, my current positions, and a full breakdown for stocks I'm interested in, the specific names, the levels, and how I'm sizing it. Market Brief Pro is launching soon. Join the waitlist for free today at investwithteddy.com. Link is in the description. So should you invest in cannabis stocks? Let's bring it together. Medical cannabis is now Schedule III, federally recognized for the first time in U.S. history. The 280E tax penalty that was consuming up to 80% of some operators' earnings is gone for medical businesses. Banking access is opening. Index funds and institutional capital have their first legal pathway in. And Trulieve just proved that getting onto the New York Stock Exchange does not require waiting for Washington. It requires the right legal structure. What is not resolved is recreational cannabis. If recreational rescheduling goes through in the upcoming months, every benefit medical operators are now receiving extends to the entire industry overnight. If it doesn't, the thesis moves on a longer clock, not dead, but delayed. Ultimately, the decision to invest in cannabis stocks is up to you, based on your process and on your goals. To keep track of the stock market and how the recreational cannabis hearing plays out, sign up at investwithteddy.com. My newsletter keeps you informed in just 15 minutes a day. Link is in the description. Otherwise, thanks for watching. And if you found any of this helpful, it would mean a great deal if you liked and subscribed. Stay tuned for more videos.